All right, everybody, welcome back. So in this video, we're going to talk about an indicator here that needed to be built. I couldn't really find many versions of it, so I had it built on TradingView by someone who helped me out because I don't code TradingView. But then I also have one built for Thinkorswim. Now I'm going to put the code for the TradingView version into a text document, which if you go to the Thinkorswim workbook, is how you can get it. So I'm just going to take all of this code in here and I'm going to copy it and stick it in a text document. What you'll want to do is download that text document, open it up, copy all the language out of it, come in, hit Pine Editor, open, new indicator, paste all of that, and then save it and apply it to your chart and you'll have it. So what is it? If you don't know who Gerald Appel is, this is the guy who created the MACD, right? That's a famous indicator. It's been around for a long time. And in his book, Power Tools for Active Traders, he talks about a lot of different indicators that you could build. Now, the book is old, came out in 2005, I believe. And in the book, he was talking about how to build these tools, but really the tools or the data that you need for the tools is readily accessible in 2023. It's not a problem at all. And so I've already built a number of the indicators that he talks about in this book. This happens to be one of them. This one is a very simple go, no go line for a daily chart when you're trying to identify, does a particular stock or index or ETF, whatever, does it have any momentum to it? If this is above 4, then it's considered buyable. You want to buy it really as it's crossing through the 4. And as long as it's holding above that, then it's a buy. Obviously, if it starts fading back towards the 4, then it's fading back, it's losing its momentum. Probably wouldn't want to buy it at that point. And so you would then look for a new crossover. If we kind of line up where these crossovers are, you can see a really great move here on a crossover. We had a couple of false starts right here and here. And I randomly picked rig because it was something I was already looking at, but we're going to look at other things too. You can use this also for scanning and for filtering, right? So if I want to find things that haven't crossed yet, then I'd want to build the scanner that looks for anything below 4, or I'd want to find a scanner where it recently just crossed through the 4 in the last 1 or 2 days. And when we get to Thinkorswim, I'll show you I've already got one built. But here's another false start. It still had some push to them, right? So one thing that I've noticed when it comes to indicators is that when it's hovering around a line of importance, which for this indicator happens to be that 4, when it's hovering around like that, you really don't want to try to trade those crossovers. That's not what you're interested in. What you really want to see is a good solid crossover where something goes down below that zone and then comes back up through that zone in a nice, clean, smooth move, right? We'll go in and look at examples, but here's another crossover, nice, smooth move. And here too is a nice one. And look at the follow through on this thing. All right. So what is this thing? What he's doing, or what he recommended we do, is look at the rate of change indicator on a 5-period look back. And then we look at it again on a 15-period look back. And then we look at it one more time on a 25-period look back. That's your short duration, intermediate, and long-term look backs on the rate of change indicator. What he recommends is we take all 3 of those and we add them together, and whatever number we get is plotted in that white line. He then recommended if we cross through the 4 to the upside, that it's a buy. And if we cross back down through the 4, then we would sell it. Now, I don't buy and sell based on an indicator crossing over, right? That's not a reason for me to buy it, but it is a reason to get my attention. This is telling us that momentum is increasing, and that's what we want, right? We want to find things with a good momentum. If I run a scan and I find that something has crossed through that 4, I'm not going to run out and buy it just because of that. And certainly I'm going to manage my trades and get out of them long before this thing falls back down below a 4. You got to remember when it was written too, back in 2000. And a lot of people were still using delayed data back then. It wasn't an ideal market like it is now. The liquidity wasn't the same. So many differences. We can manage the trade our own. But I think the main takeaway is that he just considered the momentum having dropped enough that you wouldn't want to be in it anymore, right? That's the takeaway. So we're not really using it as a line to get out or a line to get in. When it crosses through the 4, it's got a lot of momentum to the upside. And when it crosses back down below the 4, all that momentum is gone. That's the greatest takeaway. And then we can just do what we want with it from there. So if I find things that are above the 4, I feel like it's got momentum in it. I can then go to whatever time frame I want and try to find opportunities that suit the idea of an upward moving market with momentum. Maybe I use breakout levels or pivot points, things of that nature. I will find my own way in because I know that this is recording high momentum. Indicators are really great at measuring things like a tape measure. And when I go out in the garage and I want to cut wood, I don't begrudge the tape measure, right? Trying to do it all myself using my eyes. I get precise and I make specific cuts based on specific lengths. Well, this is no different. We're measuring something. The indicator gives us a value, and that value tells us, is this thing running with a high momentum or not? That's it. That's all I need to know. And then I can find my own way from there. Okay. So that's the indicator. It's on TradingView. I'm going to share it in the Thinkorswim workbook. So that's where you'll find it, in that Discord. If you don't have access to that Discord, hit me up in the Bullish Bears Discord. If you don't have access to that, maybe it's because you're not one of our members yet. So we have this massive database of charts and scans and studies and indicators that we've collected from all over the web and ones that we've built ourselves. And we just keep it in this private Discord that we call the Thinkorswim workbook. You would have access to that workbook if you were a member of the Bullish Bears. So you'll want to go down below and look at the links to go to our website, join up, come over to the Discord and give us a shout. My name is Signet, and I will throw the link to you. You can just follow it right on over. It's a fantastic database. I've been working on it for a couple of years. And what I've tried to do along the way is actually put information in there so that it's not just an indicator with a link. It's an indicator with a link and a picture and a description of what the indicator was designed to do, who made it, if I know, right? Because I don't always know who made different indicators that are out there. And then I've made quite a bit of my own. This is one on TradingView that I didn't code. I just recommended that a coder do for me. And they were really gracious with their time. They got it done super fast. And now here we are with this. All right. So this is what it looks like on the daily. And we're on rig. But let's go over to Thinkorswim. We got a couple versions here. I called it the triple momentum model. Take it out to the daily, and we're looking at it on NVIDIA. Now, I do have a scan, right? So we're going to come up here. We'll go to the triple momentum scan, and all this scan is doing is it's looking at what's out there and then trying to find things that have made that crossover above the 4 level in the last day or two. Okay, so that's what we're looking for. A crossover in the last day or two. So let's see what we have here. AIG has one of those crossovers. And I did also add this watch list column to show me at a glance if something is above or below that level. All right, so you can see Amazon had this breakout here. TRB setup, nice breakout across above on the triple momentum model. And that is an example. That's how the scan works. We would just find things that have only recently made that crossover. And then we want to make sure that it's got the right shape, right? That we don't want some gentle or some consolidated mess right around the line. We want a nice clean swoop down below and back up through it. It's really easy as a visual to, if it's doing this around that level, we don't want it. We want something that's come down through that level and then come back above. And we can see many examples of that right here on GSK when we had this nice run in the chart and we had that nice crossover right there. Okay, so they don't always turn out that way. We had this good crossover here, nice run. Same thing here, that nice run. But we've had these false starts, right? Where it just ran up for a few days and then it stopped. And that's because there's no indicator out there that's going to predict the future. And we don't know which one of these are going to do their job or not. But what we're looking for is markets with a high momentum, right? And then we're looking for that momentum to continue. If we are already targeting things that are exhibiting the symptoms of high momentum, then we know we're in the right basket, right? And whether or not that momentum lasts and we see the market continue to move, it's not this indicator's job to predict the future. It's only the indicator's job to tell us what does have momentum. And then whether that momentum sticks around or not is a completely different story. So we would always need to do more work. This just gets us pointed in the right direction. I really appreciate your time. I hope you find this indicator useful and check out that book, right? Because Gerald Appel is a really smart guy. He developed the MACD and so many other things. And the book is it's an easy read, it's an interesting read, and it's certainly an educational read. I've gathered a lot of indicators out of there already, and I've learned so much more beyond that as well, right? So really great place to go if you're looking for a little bit of insight, maybe a little something different from the same old rat race every day. It's all about the fangs, that kind of stuff. It just gets old. So hopefully this is a little something out of left field, and I will see you guys next time.